But let's get talking a little bit more about the fundamentals of the market. We have Shailendra Kumar, the Chief Investment Officer, Equity at Narnolia Financial Advisors, who joins in to discuss the fundamentals of the market. Shailendra, hi. Thank you very much for taking the time out. Well, I was just looking at a couple of statistics. I understand that you have a multi-cap fund which is generated around 244% in terms of returns, as compared to the BSE 500, which is given returns of around 100% in the same time frame. Can you give us a sense in terms of what exactly your fund consists of in terms of stocks and sectors?
Yeah, thanks for inviting me first. So let me just first give you the reason why this kind of return we have achieved, okay? And before coming to the stocks. So there are four pillars that we say always. First, we have a very settled investment style or philosophy, which we name growth in value. And now when I'm using the word value here, I'm not deriving the word value from the word valuation, but from the word valuable. Taking simply like when somebody is running a business with a very high profit margin, you say the business is very good, right? Similarly, if somebody comes with a very small capital, say 1 lakh, and does a turnover of very high, say 1 crore, you say great business. So simply some businesses where these parameters like margins and the asset turnover are improving, you buy those stocks only. So this is the philosophy of growth in value. The second pillar is like for the funds, what you do. You start with information mining, you scan through multiple data, you go through results, your annual reports, management commentary, strategy, interviews, right? And once you mine the information, you do research. Again, for research, we have a very settled 24-stage processes that we run through, and then selection, which is our philosophy, then allocation, where we try to be, we regard the benchmark a lot. We never diversify from the benchmark much, and then you have the monitoring. Thirdly, what differentiates us for this performance is like, we are a typical bottom-up investor, and we don't believe much into top-down possibilities, but we are more into bottom-up probability of what financials of a company will look like. And the fourth pillar, of course, is the discipline through which we have gone through. This has helped us in past, say like 3-4 years, almost get through about 35 stocks, which has gone 200-400%, like Britannia, Marico, and a couple of
Mr. Kumar, hi. Good morning. Prashant here. Could you, so the structure is an AIF, right?
Correct. So we have AIF also, where like primarily we have 3 different elements. So you currency, fixed income, and equity as well.
Okay.
So we do a lot of relative value between these 3 different asset classes, and among equity also, again, you have a lot of relative value.
What is the size of the equity portfolio?
It's more about capital protection fund, yeah. So overall, we are managing about 100 crore plus, yeah.
100 crores, and equity would be what?
So like large part is equity, and AIF now we've started selling like, so almost about 30 sort of, yeah.
Okay. And so you have a 3-year, I mean, you've been doing this for the last 3 years in terms of the fund, AIF.
So the PMS, the multi-cap fund is there for last 5 years plus now, almost 5.5 years, yeah.
Okay. So if we could just get back in terms of the sectors that you're primarily making returns on right now, and what kind of investment horizon have you had within that?
Okay, so like we had traditionally having quite a good amount of exposure to financials as well as consumers. Lately, we are bullish on, at this particular level of market, we are bullish more on infra, whether it is like roads or city infra, metro, smart city, etc. We also bullish on rural play, because we think the rural farm income related reform is the last to come, and I hope to see something very positive there in the next 1 year.
Okay, specific stocks that you can refer to?
Okay, so a couple of stocks that we have already in our portfolio, we bought about 6-7 months back. So like something like insecticide we have in our portfolio. If you look at the government plan to restrict most of the agrochemical manufacturing in India, plus the company is specific, they are like getting out of their legacy brands, they're coming out of a lot of new technicals as well as herbicides, which will improve their both the margin as well as their load on the inventory also. We have exposure to something like DCM Siddharam, where you see like both their the chemical side of the business as well as sugar side of the business. Sugar particularly is in a sweet spot for them, and they have restructured most of their farm and rural retailing business. And look at their margin for DCM. I said the margin has doubled almost over the last 2 years.
Okay. Just a quick question then, Shailendra. If you were to choose, a specific sector, say something as NBFCs, in fact, let's talk a little bit about NBFCs. Would you have any sort of exposure even within the smaller kind of NBFCs? And what might your strategy be within that space?
Okay, so like in the past we had a couple of NBFC like Bajaj Finance and all. Right now we have a very small exposure to NBFC. We have Chola Finance in our portfolio and a couple of market like non-NBFC particularly are thereafter. So the idea is like right now we are a lot of companies if we look at, things are getting built on the basis of possibility which can happen in the next 3-4 years, right? Financial saving is improving, no doubt about this. So the sector per se, if you look at 3 to 5 year horizon, I would say a great possibility, but whether in next 1 to 2 years, the kind of valuation they are commanding, based upon the possibility built in their expectation of earning and all, we think we have to be a little cautious as far as short-term things are concerned. Like.
So you've sold out entirely from Bajaj Finance?
Yeah, correct. So at a particular valuation, you don't find that clarity, conviction goes off a particular level of valuation.
Okay, I have a question not about the market and what you think of it, but basically about flows, Mr. Kumar. It's a gush of money which is coming into equities, equity mutual funds, which is also seen a lot of, PMSs flourishing. People are setting up new AIF structures. When we talk about flows into equity products, how easy or difficult is it for not established large mutual funds to take in some of this large sums of money which is coming in every month? I mean, just trying to understand how the industry itself doing. Yes.
So if you look at things 3 or 4 years before, it was very difficult right now. But over the last 3 to 4 years, the awareness for financial savings has improved a lot, right? And that provides space for more players to come. I think the kind of market potential that is there in India right now for financial saving products is humongous. And whether the current set of players are enough to handle it, or do they have a strategy enough to satisfy different segment of the investing population, I think there is scope for a lot of new players to come up. I mean, and it's easier to sell right now because awareness has gone up. Yeah, of course, the price is something which is scaring a lot of people, and but I think the run is quite smooth from here on.
Okay, fair enough, Shailendra. We're going to leave it on that note. Good speaking with you. Thank you very much for joining in and talking to us. So that's a view coming in on the fundamentals of the market.